I just 5 or 6 days back, I made an online purchase, and the feedback was that because of lack of good supply chain management and all, there was a big delay in order, and this really is going to be the next big challenge for online companies in terms of finding logistics and courier support. That is something that's going to be the next big opportunity.
Yeah. But Anand, does that justify the valuations that you're seeing now for, or the run-up that you're seeing in logistic companies? Because everybody seems to think of that as the best proxy to play e-commerce.
Well, given the valuations that the e-commerce companies are demanding, I think this seems to be a pittance to pay.
Okay.
But if you were to really look at the business, I think there are two different categories. So there is a gateway district park or a container corporation, which is fairly heavy-duty logistics, and there will be others which are actually taking courier packages and delivering e-commerce kind of platforms. To my mind, the first is a stable business. It is going to be a growing business. There is a lot of capital required, so entry barriers are reasonably high. In the second part, I think margins are extremely difficult to sustain or grow, because it is going to be a manpower business, and anything to do with manpower in this country is extremely difficult to generate margins out of, or to increase margins. So it's going to be a business which will grow on the top line, but it's unlikely to be able to create any kind of margin expansion despite the kind of size that you may achieve. So within the courier business, I would look for those which are more industry oriented in terms of safety. For the rest, I think the valuations are probably ahead of themselves, but the volumes will, of course, grow quite exponentially from here.
I love that point that you made, because it's interesting. I think some of the reading that all of us have been doing on the e-commerce space was also talk to you about how technology is changing, last mile delivery, right?
Yeah,
so I know it sounds unreasonable at this point in time to say that, drone technology, or who knows what the technology will be of the future. But that's the second group of companies that Anand was referring to, will be easily replaced by any big leaps in technology, than the first group of companies. Maybe 5 or 8 years down the line.
Unless they become technology leaders in that place. Because,
well, it's quite unlikely that, I don't know, unless Gati becomes the next big drone delivery service, I'm not sure if it will come from something like that.
I don't think drone delivery is going to work in India, though. I have my
I agree with you. I was equally skeptical, but never say never. Look at how technology has changed our lives in the last 5 or 8 years, right? So, I'm just curious to know whether businesses like Anand pointed out, which fell into the second group of high volume, low margin businesses, would survive a technological challenge as much as, let's say, a Gateway Distriparks or Concord, where the business fundamentals and the solidity of the business is a whole different case.
In 1992, not many people gave cable TV a chance.
Yeah, right. Yeah, well, we were talking about this like 5 minutes ago in the break.
Okay, yeah.
Who would have thought that Nokia, was not a dominant player in cell phones? 3 years ago or 4 years ago. Relevant, dominant, whatever, player, in itself. That's why. So, all right, let's get back to our guests for more market conversation. We also have Rahul Mohinder joining us now. Rahul, what do you make of the fact that we managed to sustain above 8,000?
I think what I'm really taking away is the fact that there's a lot of buoyancy still in the bank Nifty, and if I try to segregate which are the stocks which will really keep the Nifty up, it's really mostly banks. I can't say that a Unilever or a Reliance or an ITC will come and help the Nifty in a big way, but it's looking like the oil marketing companies, it's looking like banks. So I think I'd really look at buying into those stock specifics rather than just buying a broad-based Nifty.
Okay, so Rahul, Bank Nifty in fact is now up 8.5% this month. Last time we had such a big rally, I think it was in May, and that had a bit of a near-term peak indicator for the market. Do you think something similar could play out, or would this time be different, and can banks continue to make new highs?
Anuj, I think what's happening is there's a lot of sectoral rotation. So you might see that the bank Nifty will see resistance towards 17,100, which is certainly a very close distance from where we are at. But if you look at some stock specific calls, let's say SBI could probably move to 2,800. You could get some meaningful trading moves. So next couple of trading days, yes, banks would see some action. But talking about that topping perception, I don't see that happening very quickly from a broader sense, because the Nifty itself technically is a strong chart, and I think will probably hold out. And what you might tend to see is some kind of rotation where people feel that maybe the banks have done its bit, and start looking at some of the other cyclicals which could really help the Nifty. So sector rotation is what I'd really term it as maybe going forward.
Okay, just about 10 seconds for market closing. So let's just do a quick recap. It's going to be a strong day for the market actually. Just shy of that 80-50 resistance mark. Yet again, it was banks which led from front. So State Bank of India was on top, 2.5% higher. Of course, pharma stocks contributed in late trade, the likes of Sun Pharma and Cipla. But in terms of weight on the index, it really would have to be SBI, ICICI Bank, HDFC from the financials. That would have had major support for the market. In late trade, of course, power stocks did quite well. Amrish was pointing out yesterday that all the power stocks should do well from here on. Tata Power was up about 2.5%, as Menika pointed out, and a couple of other stocks that look good included stocks like Ultratech and Ambuja Menika, both up 1%.
Yeah, on the downside though, we had one pharma stock leading the Nifty lower, which is Lupin, for reasons as we've already elaborated on the show, down 2.5%. Bharti was the other one that didn't do very well in trade today, down 2%. Hero MotoCorp down 1.4%. PNB, amongst the few financial stocks that have not done well today. PNB and I think Kotak Mahindra Bank and Axis Bank, those three stocks are going to end in the red. Otherwise, we've seen some solid green across the financials. Jindal Steel and Power down about 1%. Bajaj Auto down just under 1%. And then we had some other heavyweights like Reliance, ONGC, Hindustan Unilever that didn't do very well in trade today. Essentially, it was just banks and pharmaceuticals leading the markets higher, and then power in late trade. Otherwise, most other sectors were either flat or negative. Mid-caps?
Indeed. On the mid-cap side, there was quite a bit of outperformance that we had. The index itself was up 0.5%, but in terms of top traded stocks, of course, you had big outperformance. So 7 out of top 10 stocks were in the green today. Crompton Greaves was up about 1%, but the stock that really had it good in late trade was Manappuram General Finance. That was up about 10%, so that stock looked quite good. NCC was up 12%. HOEC up 8%, and as Varinder has been pointing out, all the logistics stocks led by Snowman Logistics, the new entry on the bourses, that was up about 9%. And HMT, that really has been one of the strong stocks of the week, up 7% today and 28% for the week.
All right, that's how we've ended the day. Ajay, besides e-commerce, which is really a hot topic of conversation right now, and besides financials, because we've already discussed that, what are you expecting will lead the markets higher from here on? If that's where you expect the markets to go, are you in the camp that we will first see a sharp correction before these markets will find the appetite to move further up?
Very, very difficult to say, Menika, and there I think our technical friends help us out a lot, and that's why I keep checking with my technical analysts, and there the market has got a good strength, what Rahul was also mentioning. But in fundamental sense, we are not very undervalued anymore. The big fact is financials are 30% of the index, and so they do determine the value of the index to a large extent. Looking at where we are expecting a lot of reform news to come in. Domestically, we might be well positioned, but internationally, who knows? Sunday evening, we thought a lot of the European issue is gone, and yesterday was a root shock. Today, again, Europe is up. So a lot of volatility and big moves on very unpredictable news flow that's going around. So might be better to just look at Indian fundamentals and stay the course, because international volatility is going to keep impacting. Now we have to wait till Fed comes out on Wednesday evening US time and see what is the announcement. That's going to be an impact on the markets. So a lot of things continuously coming by. A domestic story is slowly turning around, and financials are a good way to play it. That's probably few things that we are certain about.
Anand, frontline IT has corrected 12%, in certain cases even more than that. The index itself is down 6% for this month. Would you make a re-entry into the frontline IT names, or would you wait out for some more correction?
Well, it's on a rotational basis, as you said, the Nifty, the bank Nifty has actually gone up, IT has fallen. Relatively, you would argue that it is quite possible to now do a switch on both of them. There is no question to my mind that the valuation for at least if you leave aside TCS, for most of the other companies is not that demanding, and the quality of the company is quite good. The only question is the earnings growth. Assuming that there is no major hiccup in terms of the growth in the economy in the US, one could argue that you would get tailwinds from the currency as well as from the fact that the business would actually improve. So overall, I think the valuations are probably the cheapest there. You've not been attracting that much attention into the IT bar last couple of months, only on the basis that the domestic cyclicals look like they're coming out from a deep hole and therefore may give you more delta. But as Ajay was pointing out, once the undervaluation is gone, you have to go back to those companies where there is more visibility of earnings and the valuations are not that stretched. So I think IT does fall in that category.
IT fell victim to the fact, Anand, that it didn't quite dazzle the street with earnings, did not outperform expectations, etc., etc. Of the earnings season that we've seen so far, what has stood out for you is in terms of unexpected, performance either on the good side or the bad side?
Well, I don't think we've seen too much in terms of the positive earnings surprises, right? I think the analysts had already kind of upped the earnings estimates quite a bit. And so far, I would imagine that, you are at least marginally equal in terms of upside versus downside expectations, if not slightly on the negative side. So I would imagine that for the second half, you're unlikely to see any significant upgrades in terms of earnings. And by and large, the market's also begun to discount that the earnings growth will not happen this year. And we're already looking at the next 12 months after that, where a more likely possibility of an earnings growth of 17–18% looks reasonable.
But yet, Anand, the market doesn't correct. I mean, your earnings season has been muted. It's expected to be muted for the next 2 quarters at least. We had a 5% correction in the first 2 weeks of October, and in 3 days we made it all up. Is it all on hopes of reforms, and how much patience will the markets have with policy?
I think that seems to be the situation globally. The one thing that easy money has done globally has been the fact that you've had asset prices go up. Whether the economies have recovered or not is a moot point, but asset prices have definitely increased. And India has been running an easy money policy for years now. We've had negative real interest rates for the longest period that you can think of, and only now we are starting to look at real interest rates becoming somewhat positive. So I think it's not that we are standing out separately from the rest of the world. The other point to remember is, and this is very crucial, that we are already overweight in most global portfolios. So, given the fact that we are one possible oasis of resumed growth as opposed to what the rest of the world is looking at, most people would be already overweight India. Therefore, incrementally, for us to continue to get more flows on a larger than our share basis is going to be a bit tough. So I would still watch out for what happens to the dollar, and if the dollar index continues to appreciate, I think you will continue to have some hiccups in the emerging markets, albeit India is probably the best positioned among the lot.
Rahul, one stock which is quite clearly not helping market right now is Reliance. Again, struggling at 200-day moving average, the biggest drag on the index today. How are you reading charts on that one?
Nothing very positive at this stage, Anuj. I think we really have to get above 970. That's an important level on Reliance. If you look at the whole, last month, we've really struggled to get above that point. And I think going forward, I would really look at that 970 level as the trend decider. My sense is the stock will probably stay sideways. I don't see a vigorous downside. You might, on the odd day touch the 900 level, but nothing very, very severe from this point. At the same time, in the market that we're in, I wouldn't like to go long into Reliance right away.
The joy on oil and gas stocks, especially stocks like ONGC, has to some extent come to an end. Would you say, Ajay, given that maybe from here onwards, there is not the expectation that there will be any big falls in crude prices? So I do want to sort of remind viewers that I think yesterday Goldman Sachs put out a global report on crude oil prices, and they've cut their expectation on price from, I think,
86.
above 80 to about $75 a barrel for 2015. So I'm just curious, are you playing on a lower crude oil sort of bet at all from here on?
I think the best case scenario is prices staying in these levels, Menika, because on 92, 93 million barrel, the Saudis can change price virtually on 3 to 4 days basis by reducing their production. They can produce anything from 12 to 9 million barrels. So Saudis hold a lot of that leeway. It's not that easy to transport oil from, say, the North American mainland into Asia. They have been cutting prices to maintain their market share. and Kuwait and Iran has followed. So oil is so complex to understand. The Saudis want Iran to suffer. Iran's budget balances at $153. Russian budget balances at $100 oil. So who's doing what favor to whom at what point? That also comes in, apart from global growth or Chinese soft landing or hard landing, supply and demand. There are a lot of these factors that also do come in. So overall on Indian oil and gas, I would still say that stay positive. ONGC and BPCL, those have been our consistent picks. ONGC, the gas price hike got overbaked. I think there is an overhang of disinvestment coming in, and we need clarity on when that will come in and to what extent. Overall, the government's finances are not looking too good, with especially indirect taxes showing no growth at all in the first 6 months. So that is a big need, the disinvestment number from Coal India and ONGC, and we need the telecom auction, we need the, if there's anything coming through the coal auction route. All those things are being monitored. But overall, oil and gas, short answer, oil price probably this level of Brent 85, 86 is good, is probably the best case scenario. Going below that, you might see output cuts coming from countries who get impacted immediately.
All right, gentlemen, we're going to leave it there for today. Thank you so much to all three of you for joining us this afternoon on Closing Bell.